Well, thanks everyone for tuning into this week's episode of Mortgage Matters here with Chris. We have Chris Galley with Novus Home Mortgage, mortgage expert. In your past life, you've been a broker, you've been a banker, you've been everything regarding real estate. And you've been doing this for a little over 26 years. So you come with a lot of knowledge, a lot of historical knowledge, which is so important today for this. As you mentioned, we're diving into some millennial topics here because, as you said, they are the largest home buying segment right now. And what's interesting is that millennial home buying looks nothing like previous generations have. And there was some data that was released looking back in 2020 and kind of the previous years and comparing it. So I just thought some of that would be really good to dive into. And what you guys have in terms of tips and programs and such that millennials can keep an eye out for. Home buying is not easy. And it's not easy going alone. So no one has to go alone, especially when they've got expert right here. So I'm going to rattle off. Oh, go ahead.
Oh, no, I said, that's it. You're right. Oh, keep going, Mindy. You're doing great.
I'm just going to rattle off a couple statistics regarding millennials. So as we said, the millennials are the number one in terms of like looking at the generations. They're the number one group buying homes right now. So that means of all the homes that were bought in 2022, 2021, and a couple years prior to that, it was millennials. In terms of first-time home buyers, millennials make up like 72% of first-time home buyers, which is like, just astronomical. But here's another interesting fact. The average age for a millennial home buyer to buy their first house is 36 years old.
Correct.
Which is later. Chris, I'll let you dive into that, but it's a little bit later than other generations have been. Now, just so that everyone is clear, millennials right now are ages 27 to 42-ish, around that age. So that means that the first upper half just started stepping into home buying a couple years ago.
And I think we're actually seeing the lower end of them starting to pick up. So, the 26 to 27-year-olds, they're actually jumping into the market. And it's interesting because only 49% of all millennials own homes right now.
That's crazy.
That's a huge market and opportunity, especially if you're an agent out there or you're an actual buyer and you're 35. Hurry up. You're the last on deck. You want to get that home, and start building some equity instead of building someone else's equity, because you're either building someone else's equity right now if you're 36 and renting, or you're not building your parents' equity. You have the best scenario where you're probably living for free. So
not long-term, though. That's not a good long-term thing.
Yeah, 3 square meals for free a day. I'm like, that sounds pretty good to be right about now, right? So you're the smart ones. No, just kidding. But now's the time. Now's a better time than ever. You have interest rates are a little high, so now buyers have a little bit more of an edge than they did the last couple of years where there was no edge. It was hard to, be a millennial with little money down, or say you had to do a government loan where you had a lot of sellers saying we're not accepting FHA pre-approvals. So, or you were getting outbid by people paying more than they should. Well, again, we goes back to dating the rate and, marrying the house kind of scenario. Even though the rates seem to be a little bit higher, they're still lower than they were last year. And the opportunity is there where you're not going to be in pricing battles as well. So I think a couple more of those numbers is 43% of all home buyers in 2022 were millennials. And that was an increase from 37%. So, you had a 5% increase, and which is a pretty big deal. And you still have 51% of an open market of millennials. So this is where there's opportunity for both the buyers and for agents that are working, focus on millennials. Millennials are, this is the time for them. They're starting families. They're starting to grow a little bit. So if they haven't bought a house this is where they're going to either buy their first house or even their main house because they focused on their careers.
Before we jumped on, we were joking that I had said that millennials are kind of the grouchy generation right now. And I can say that because I am a millennial and I can confirm. But the reason we were joking about that is because millennials, in the age that we were kind of growing up and then entering adulthood, a lot of us were in high school or maybe college when the financial collapse happened, right? In 08 and all that. And we saw the fallout of that. And that left a permanent mark. I mean, when you experience that in such important years of your life, it leaves an impression on you. Whether, obviously we talk a lot about how today is nothing like that, but it's still hard to unsee what we saw. We had wars for so much of our life. We had the Great Recession immediately following that economic collapse. And then just as we're getting our feet on the ground, with stable jobs and stable incomes, we have the pandemic. So obviously every generation has had their battles and struggles, but that kind of, I think, paints a picture and shines some light on why millennials have been so hesitant to step in.
And you lived it. I mean, you look at these kids that were in high school, or like you said, going into college, and with all the number of foreclosures, how many of those kids were in a situation where their parents lost homes? And they saw, man, home ownership. We were uprooted from our home. We lost our home. I had to, we lived in an apartment or we had to rent a house. Man, home ownership. Why am I going to go buy a house and I'm going to lose money on a house? That you could see how that happened. And through re-education and figuring things out as they got older, they finally probably, light went off and said, but wait a minute, I'm paying someone else's mortgage all these years and keep increasing my rent every year. I started at $1,000 a month, 7-8 years ago, and now I'm paying, $2,500 a month. This doesn't seem that good. This doesn't seem like that good of a deal either. Now I got to move from this apartment because I can't afford it with the increase of rent. How can I get a more stable payment? And through home ownership, that's where you can get a stable payment and a fixed payment, and in hopes that the rates go down to make it even less. So instead of increasing, you may get into a situation where you get in now and you can decrease at some point. And again, there's a lot of, maybe, I don't know if I go as far as to call it PTSD, but a lot of people who lived through that era, saw a lot of pain through their families, or they know somebody or their friends, had to get moved away and moved out of town because they were in the nice neighborhood and now they had to move to the other side of the state or somewhere where it was more affordable for them. So a lot of these guys are waking up from the ether where, other generations might have been buying their first houses in their 20s, which I think we're starting to see now with, I think, was it Gen Z? I'm starting to see a lot of Gen Z people coming in, starting to buy homes, which is really cool. But the definite thing is, another thing that the millennials have against them is they're a little hesitant because they hold a record levels of debt.
Yeah.
With student loans and all this stuff that came, they have good income, but they never had decent savings. And I don't know why, there's ebbs and flows with that. I mean, it might be from what they saw with their parents. I mean, again, history repeats itself, right? Maybe their parents that's why they lost or went into foreclosure, because they were buying houses at 100% when they were buying them and losing them. And maybe the millennials, they enjoy, you could speak on this better than I can, Minnie. You're a millennial. You like to spend your money. Your friends like to spend their money. Well, why is it? I don't know exactly. I think, kids were getting out of school and they think they're going to get out of school and make $100,000 a year because that was what our generation was told, right? My Gen Xers, you go to college, you're going to get a career, and you're going to get out of college, and you're going to get a big paycheck, and you're not going to get paid those, call it factory wages that, the kids who didn't go to college in my generation were doing, and they were getting, the minimum wage, middle of the road incomes. But I went to college, so I'm going to make 80 grand, 100 grand a year back then. Well, these kids were getting out of school with a huge amount of college debt and walking into $30,000 a year jobs. entry-level jobs, and they didn't have enough resources or the know-how because we don't teach this stuff in school, which, the Mortgage Bankers Association, on a sidebar, is doing a really good job on starting to integrate classes in colleges on finance. It's a big missing piece on how to budget, and how to, pay attention to what you have going out the door, what kind of credit that you take on at a young age, and how important it is to do some things that are smart, or even buy a house early on. We have Kayla who works with us. She may be watching. Hi, Kayla, or listening. She bought her first home at 21 years old, right? She did house hacking. For all you millennials out there, house hacking is when you buy either a single family home or a multifamily home, and you either rent the multifamily property out and live in one side and rent the other units out, or even if you went as far as to buy a single family and rented rooms to your friends to offset the cost, right? Same thing if you're renting a house with your buddy. He's paying $600, you're paying $600. But she did that, and then she ended up selling the house when she was 29, fast forward 8 years later, and put $250,000 in her pocket. And she paid a lot less than she would have paid for rent because she was sharing in that expense.
And that's what a lot of millennials are missing out on, that exact experience right there, or have missed out on, I should say. You mentioned the debt, and I think that's a huge factor into why millennials, maybe if they're not hesitant, maybe they struggle to qualify. Because I heard a statistic that this was just a couple years ago, that the average student debt per student was about $35,000. That was a couple years ago, so it's likely gone up since then. That makes a huge impact, one, on how much you can save. So we're talking about why millennials can't seem to save. So we've got that, plus credit card debts at an all-time high. Car loans are at an all-time high. And it is affecting that debt-to-income ratio. Chris, can you talk to us specifically about how the debt-to-income ratio works? And then one thing for millennials to know, in terms of student loan payments, there's been some changes because I think that the Federal Housing Administration has recognized this issue coming down the pipeline of the student loan crisis. So talk to us about those two things.
So, one of the things is on the student loan debt, right? So to the point that the national average, let's just use that number, that $35,000 of student debt, you're walking out with a pretty hefty payment at the end of the day. So if you're doing a conventional loan and say it's deferred, a lot of people will say, hey, it's deferred. And that's great. You don't have to pay it right now for whatever reason. However, when you're doing a home mortgage, we have to count something against you as if you're paying it. So we don't know when that loan is going to come due. So we are obligated, or we have to, based on the guidelines from Fannie or Freddie, to count 1% against that balance as a payment. So let's say, for example, you have a $400 car payment, all right, and you're making $40,000 a year, a little over $3,000 a month, and we're not even taking in to consideration taxes because your take home might be only $2,000, let's just say, or $2,200. Now you have your $400 or $500 car payment because you need a new car to get back and forth to your work. And now you have this $350 payment that I have to count against you. So right now with the $2,000 that you have coming into your, into your household based on cash in hand, now you're already down to $1,200. And now you have a living expense. How are you going to afford a mortgage? If you didn't have one credit card debt, right, at $40,000, $50,000 a year, you're left with no money to pay credit cards. You still got phone, you still got insurance, you still had, the list goes on. We all know what it goes on to. So that's a big hit. And even if we were to do a government style loan, whether it's FHA or VA, I have to count 0.5%, which is still a little better on 35,000, right? So you're looking at, 220, 175 or whatever that comes up to. So that's still a big chunk of money that has to be credited against you as far as your debt to income is concerned. So a lot of these agencies, they've seen that there was a gap, and there's ways now to where they're going to look at what's reported and they're going to go against what that payment can be. But currently, I mean, if you look at the way that it goes, if you have 100,000, it's easy to have $100,000 of student loan debt. You know, if you did 4 to 6 years out of college. I mean, I see this so much, guys, and it's so important to really wrap your head around this. Is people who have $100,000, that's $1,000 a month against them. And this is a reason why. So I'm not knocking the millennials in no way, shape, or form why they haven't bought sooner. Due to the rules and the way they were, it was nearly impossible if you had a lot of student debt to go in and take on that thing. So they were going and renting houses and probably having roommates. So their payments were $600-$700 each. But now, with increase and they're starting families, they're getting married later. People are getting married later. They're not marrying at 22, 23. They're marrying in their 30s. They're starting families. Well, you know what? Having roommates is cool and all, but it's time. It's time for me to have my own house. I'm going to have a kid. I'm going to have this. So importance is budgeting and planning. And you know, really who you should talk to is a good person would be a mortgage banker, just to see what you're pre-approved for. Because if you're working with a really good seasoned banker, they know how to appropriate where your debt to income needs to be, and kind of giving you guidance on how to keep that credit score up, how to deal with the bills that you have, these things that you technically should have learned in high school. They should have incorporated this stuff at a young age, which they haven't. And I think that things that people are starting to see that, well, why don't we start teaching kids when they're younger and getting them into these programs where they're teaching how to put some money away while they're going to college, how not to take on 5 credit cards and ringing them up and maxing them out. So now we have collections when they're in their, you know, early 20s. And that's another, they had such this large debt load that either they had some credit issues on top of all this added debt on top of them. Colleges weren't as much as they are now when we were going to school. So you have all this thing, but I definitely would suggest millennial, not a millennial, Gen Z, you should talk to a lender and just kind of go through your debt to income and just see where you're at and what you have to do to fix things up.
Well, and talking to the lender first can also give you an idea of, let's say you don't qualify for much right now. They can get you on a path to either help your credit score, maybe tell you exactly what to pay off or pay down, and just knowledge really is power. You know, the other thing that a lender is going to be able to help with that no one else is going to be able to help with is things like understanding mortgage loan programs and understanding down payment assistance programs. So since a little over 70% of first-time home buyers are millennials, this is something that millennials need to tune into, because many, not all, but many of the down payment assistance programs are geared towards first-time home buyers or people who don't have the money saved up, like most millennials don't.
Russian. Correct. To get your foot in the door. So there's a series of different down payment assistance programs. And a lot of people, the misconception is, well, I don't have 10% down. I don't have 20% down, because they might have heard that somewhere along the way in their journey of people saying, yeah, you want to put at least 20% down. And yes, if you could put 20% down, that's great, because you'll avoid things like PMI and, you know, like extra charges and payments that you wouldn't have to have if you had the money to put down. However, sometimes it still outweighs having to put the minimum amount down. So for example, a lot of first-time homebuyer programs, even with a conventional loan, is as little as 3% down. With those programs, there are some income requirements and contingencies that we would have to look at. But the next step down would be an FHA or government loan. You can go as low as 3.5% down. And then there's also a USDA loan, which the property actually qualifies along with the borrower. So it has to be a rural area where the population doesn't exceed a certain amount. So that would be something we could look up online. You as a client, you as a realtor, could look up a specific address and see if it qualifies for that program, but that's 100% financing. And with a good agent, we're seeing a lot more of this now, and in different markets, it's guaranteed. So when I do my loans in the Northeast, there's always seller's concession. Probably maybe 90% of the loan, the seller is helping pay for those closing costs. So now, let's say, for example, we're buying a USDA home at 250, 300,000. That's what you qualify for. There's also a loan, you can't exceed a load amount with the USDA, and there's between that income contingency as well. So you fit into this 300, 350 mark. The offer could be put together as such that the seller pays for the closing costs. So essentially, you come out of pocket with very little to $0, and you're in a new home. You can't even go get a rental for that. You typically will have to put first, last, and in some cases, security. So if your rent's $2,000, you're looking at $6,000.
That's a down payment right there.
It's a down payment, or it's the closing cost. If you needed to do a down payment assistance program, we have, and as long, again, this isn't about us. This podcast isn't about Novus, isn't about Chris Galley. This is more informational. However, we run a program through what's called the Shanoa Fund, which is a down payment assistance, which many lenders out here in the country have this program, which allows to do an FHA loan at 100%. Now, there's a little bit of a price to pay. Usually the cost is a little bit higher, meaning the interest rate's a little higher. But then again, that 3.5% down that they give you, in some cases, is forgivable. So it averages out to as if you got the regular rate where the market rate is, because it's kind of offsetting that $7,000 to $10,000 or $12,000 of a down that you would have had. So there's definitely options. And even if there's so many times I have, especially these younger buyers in all generations, when they're young and they never are first-time home buyers, they just don't think they can get qualified, and they qualify. And there's programs out there. So don't be the person that's sitting there. Don't have clients or people that you talk to, if you're a referral partner, that just say, oh, I can't buy. You need to say you should have a call with somebody, especially if you're paying an absorbent amount of rent. It's just knowledge is power. And it's one thing that you have to consider. Another thing to consider is lifestyle and the property types that you're looking for.
Yeah, so that's another interesting thing about millennials. So I guess maybe millennials are all about breaking the traditions, whether we're doing it on purpose or not. But you had hinted earlier that it used to be that couples got married usually in their young to mid-20s and then bought a house, right? Millennials, that's not so much the case anymore. Millennials are getting married older. And for the first time, the highest levels of unmarried couples buying homes together. That's millennials driving.
Right? Around 18% of people buying were unmarried couples. That's highest ever on record.
Percentage. And not only that, but again, going along with breaking the normal traditions, millennials, kind of for the first time, a lot of people have remote jobs, or they have jobs that they have to travel a lot for work. I mean, we live in such a more global society than any generation has before, and that means time away from home, or could potentially mean. So what are some things that millennials should think about, if, like, let's say they don't have time to cut the grass or things like that? What's some tips that they can look for when they actually get a pre-approved and they're actually ready to, start looking for property?
So in a lot of cases, I mean, that would have been perfect for me, because I'm not a handy person and I don't want to mow lawns and I don't want to do all that stuff. So, I may be looking at a townhouse or a condo that has like a common, that has someone clean up the mowing the areas of the common areas and the lawns and stuff like that. So you want to be specific in what you're looking for and what fits you. I mean, another couple statistics, and I'll wrap this up in like 2 minutes, but 18%, not just that 18% were unmarried, but I think this must be a record, is that 17% of all home buyers were single females, like Kayla.
Yeah.
Right? And
I
like
was when I bought.
In your first thing. And they 17% versus 9% of males. I don't know what that's saying, but I don't know. There's a lot of single women out there that, they're taking the reins and they're doing things. I mean, like in your instance, you probably made a nice little bit of money when you sold your place. Kayla made a nice little money. That's a good head start, right? And whether you're doing it through house hacking, but it's important to know what kind of property that you want to get when you're considering. So do you like to travel? Maybe you need something there's going to be some property maintenance, right? Or maybe you want to be in a community with an HOA that has a pool because you can't afford a pool, and maybe, for a small amount of money monthly that someone's going to take care of the lawn, and there's going to be a public pool.
Or townhomes are becoming so much more popular. I bought when I was that demographic back in 2017. I was 26 years old and I bought a condo because I was a single lady back then. I wasn't mowing my own lawn. Are you kidding me? That's what husbands are for, right? So
I didn't want that. You were too young. You weren't 30 something yet. So
yeah, right. So townhomes, and I think we see that when we see development. I mean, if I go out my street and go that way, there's townhomes being built. If I go that way, there's more townhomes being built.
See a lot, especially in our market. I mean, so here you are. Are you the person that wants to have kids who need a yard? Or do you want a garden because you like that kind of stuff? Well, maybe single family is the route you want to go. But if you're interested in perks like a pool or a gym, because you know what, if I have this house, I don't want to pay $100 a month for a gym membership. That's included in my HOA, and they do my lawn. I have a gym, I have a pool, I have some social area that's important to us. These are the things that you want to talk to your clients about to start getting them thinking about what they're looking for, along with those that are watching it that are thinking about, what do I want to do? Because, millennials are the most likely right now. If I was a real estate agent, I would know one thing, right? Millennials are shopping online. Yep. They're not calling you, but they're going to most likely use you, but they're going to do a lot of homework first. So despite the setbacks and all the issues that millennials have had in buying a home, we have to pay attention to this population because it's the largest population of home buyers right now. And there's 51% of them still. Obviously, all 51% aren't going to be homeowners. We know that. But I guarantee you there's at least another 20-25% of that generation just looking and thinking of buying a home right now. And now's the time.
For realtors, millennials are the number one generation to say that they will most likely use a real estate agent.
Correct.
That's good news if you pay attention to them.
That's right. You're the professional. They're okay with letting the professional help them find it. Gen Xers, you might see a lot of them just saying, I'm going to do it myself. And for whatever reason, that just is what it is. So I think you're going to see a lot with the Gen Zers too. So in closing, to tie this thing up and put a bow on it, if you're a real estate agent, pay attention to the millennials and Gen Zs, because they're out there and they're coming to the market now. They realize with the increase of rent prices, it's not working out. It's, getting an increase every year is not a fun thing. So reach out to me if you guys have any questions. We'd love to get you set up for next week's topic, which is going to be talking about this crash of the banks and all this thing, because I know it's unnerving, and a lot of the news that you watch is not giving you the full picture. So we want to be able to give you the full picture here next Thursday. So if you're here, you join us on Facebook, you join us, or just go on to the podcast through iTunes and wherever else. We're on every single platform. So please, and I beg you, I'm begging, I don't like to beg, but I'm begging, please sign up and subscribe to my YouTube channel. It just helps us get out there more. If you find any value in this, we truly and greatly appreciate you, in registering as a part of the podcast. It'll take you 2 seconds and it will mean so much to us. But we thank you for joining, and thanks, Mindy, for today. We appreciate it.
Thank you so much for your time. Like he said, check us out. If you want to rewatch this, because we went a little over, but there's so much good stuff packed into here. You can find that on the podcast or the YouTube, like he said. We keep it up there forever so that you guys are going to have it on hand. So, Chris, thank you so much. We are going to be preparing for next week's big topic and addressing all of that. So we'll see everyone here next week.
Adios. Thank you, guys. See you then. Bye now.